If you're thinking about buying your first commercial property, this video is for you. It all starts with the right first deal. Screw that up and you're in for a long, expensive lesson. But if you get it right, you can set yourself up for the passive income that lets you quit your W-2, travel the world, or even build generational wealth. Today, I'll walk you through the exact types of properties that are beginner friendly, the biggest mistakes that you should avoid, how to run the numbers when you're looking at these deals, and the kind of deal that I would do if I were starting from scratch right now. So stick around. I'm Tyler Cauble. I've been in commercial real estate since 2013, and I started with no money. But today I own over 2 million square feet of commercial space across Tennessee. I've helped tons of first-time investors get their start, and I've been through every stage of the journey myself. You've probably done some residential investing, or maybe you've been running your own business and now you're ready to play the bigger game of investing in commercial properties. But the question is, what do you actually buy first? By the end of this video, you'll know which types of properties make the most sense for beginners, what to avoid at all costs, and how to confidently move forward on your first deal. The first step is to define your investment criteria. Before you even look at a single listing or call a broker, you've got to get clear on your goals. The right first property depends entirely on what you want out of commercial real estate. I hear all the time, Tyler, what is a good deal? And it really depends. Ask yourself, do you want monthly cash flow that you can live on now? Or are you playing the long game with appreciation and future equity? Are you looking to be very hands-on or maybe even do a value-add project? Or would you rather be more passive and let a property manager or somebody else handle the day-to-day? Do you need a quick win? Or are you looking to build a portfolio for the next 20 years and beyond? Because buying a property without answering any of those questions first, that's how people end up stuck with the wrong asset, frustrated, or even worse, completely broke, which is obviously the exact opposite reason of why you're getting into this. So take 5 minutes and just write it down. Cash flow or equity, active or passive, short-term or long-term. Get clear. Be as specific as possible with your buy box. This one step will save you months of headaches and give you a better understanding of which deals you should even bother to look at. Okay, now that you've got your goals nailed down, let's talk about the types of commercial properties that are actually beginner friendly. Spoiler alert, it's not always multifamily. I know that that's what everyone talks about, but just because it's common doesn't mean it's actually the best way to start. P.S. If you want my thoughts on why I don't invest in apartments, check out this video here. Up first is flex space. It has low complexity, versatile tenants, typically like tradespeople, blue-collar businesses, small businesses, e-commerce, fewer headaches in apartments. We also have small retail strips. A 3 to 5 tenant center with local shops gives you visibility, stable leases, and a manageable entry point. Industrial warehouses. You can pretty much just set it and forget it. At least you have that potential here. Tenants stay long, there's less drama, and the leases can be pretty solid. And also, last but not least, self-storage. Simple, no broken toilets, no 2 a.m. phone calls, and if a tenant stops paying, just go auction off their stuff. Storage is boring, and boring can be very profitable. So no, you don't have to chase apartment buildings. There are other and often better options for getting started. And I have plenty of videos for you on this channel where we go in depth on all of these asset classes and how to properly invest in them. All right, now let's talk about what to avoid, because commercial real estate is a very powerful tool, but it can also punish you hard if you jump into the wrong deal. Don't go for complicated mixed-use projects right off the bat. Cool on Instagram, nightmare in real life. There's different zoning, lease structures, and construction types. Let's wait on these until you have the skill set. Go for something very simple and straightforward. Properties with heavy deferred maintenance. If it looks like a dump and it smells like a dump, it's probably a dump. Fixer-uppers are risky for first-timers because you just don't know what you just don't know. Single-tenant deals with shorter-term leases. If one tenant leaves and boom, you're at zero income, that's a risk that you don't want to take on your first deal because you're going to be shelling that out of pocket. We want this first deal to set you up for all of the rest that you'll be doing. And finally, avoid anything that you just don't fully understand. If you can't explain in 2 sentences how it makes money, don't buy it, period. Let's follow Warren Buffett's advice on this one. All right, now it's time to talk about the numbers and how to spot a real deal. First, you need to understand cap rates and cash-on-cash returns. Cap rates are very common in commercial real estate, and that is your return on that investment before any of your debt. You'll see a lot of properties in commercial real estate advertised for sale with certain cap rates, since that's the metric largely used in commercial properties to determine what a deal is. And your cash on cash, that's basically the return on your money. If you've been investing in residential real estate or other investment vehicles, then you know this one well. If the numbers don't make sense, keep it moving. Check out this video here where I dive further into the investment metrics that you should be paying attention to in commercial real estate. For your first property, you should be looking for something that's a little more stabilized. Ideally, they're fully leased or close to it. Let's walk before we run. You've got plenty to learn on that first deal without making it even harder on yourself. And use a buy box. Put together your target price range, your size and tenant types that you can manage, and lease terms that give you the predictability that you need. When a deal fits your buy box, then it's time to dig deeper. Here's an example of a commercial deal that I would look for if I was starting over. Let's say I find a 5,000 square foot building with 5 spaces, 3 of which are leased to tenants and 2 are vacant. It's listed at $500,000. I put $100,000 in to clean up the facade, fix the parking lot, and finish the vacant suites. Once those suites are leased, the property brings in $55,000 in net operating income, essentially the net cash flow before debt service. At an 8% cap rate, that makes the building worth $687,500. That's $87,500 in equity more that we just created, just by cleaning it up and leasing out the space. That is how you build wealth in commercial real estate, just by adding value. Now, here's the truth. Your first deal isn't about getting rich. It's about getting started, just getting on base. Start small, but make it scalable. A 3 to 5 tenant building outside the urban core is perfect. And if you don't have all the cash, that's not a problem. Look at SBA loans, as little as 10% down if you're owner occupying. Maybe you could go find a partner who's got the capital, but maybe not the time to go find deals. Or you could even do what I did and roll your real estate commissions in, or just build sweat equity. Don't wait until you feel ready. I promise you'll be waiting forever. You get ready by actually doing. One small deal, done right, builds momentum. And momentum in this business is everything. So if I were starting today, I'd buy a small multi-tenant deal, 3 to 5 spaces, just outside the urban core. That's where value lives. You've got lower prices, less competition, and far more room to grow. And if you want help running the numbers, download my free commercial real estate deal analysis toolkit. The link is in the description below. I made $175,000 from my first commercial deal, so check out this video here where I break it down and show you how you can do that too.